It's May 9th, 2013. I'd like to welcome everyone online who's watching us to our Ask the Analysts webcast today. We've invited two grain experts to provide their outlook ahead of tomorrow's USDA crop production and WSDA reports. I'm Chris Grams. I'm with the CME Group, and I'll be moderating this afternoon's discussion. Before I introduce our experts, I want to remind everyone who is watching us online today that you can get involved and submit questions for our experts. In the lower right-hand box of your interface, you'll see that there is a question submission area, so please start submitting your questions now. I want to also remind folks that a portion of today's conversation will be archived and available on the CME Group TV YouTube channel. That's youtube.com/CME Group TV. At this point, I want to briefly introduce our experts before we get into the meat of our discussion. To my immediate left, Dr. Bill Tierney. He's the chief economist at AgResource Company. Bill has more than 30 years of experience researching, modeling, and forecasting commodity prices for wheat, feed grains, oilseeds, and biofuels. As chief economist for AgResource Company, Bill and his colleagues provide market information, research, and strategic consulting to farmers, elevators, soybean and corn producers, wheat millers, food companies, trading companies, importers, exporters, meat packers, and others. Prior to joining AgResource Company, his experience includes working as an analyst for Pillsbury, as a professor at Kansas State University, as the principal grain economist for the USDA, and as a researcher and economist for brokerage and international agribusiness consulting firms, among others. And he is a returning champion with us here today. Thank you for coming back.
Thank you.
And joining us, Bill. To Bill's left, Ken Smithmier, who's a grain analyst with the Hightower Report and first-time contributor to these press events. Ken joined the Hightower Report in 2012 and brings a thorough understanding of cash grain markets with a tilt toward fundamental analysis. He specializes in research and analysis of corn, wheat, soy markets, and writes daily reports for clients on futures, options, spreads, and cash markets. He's also a contributor to the Hightower Report weekly newsletter and is frequently quoted in the press. Ken works with consulting clients on day-to-day market activity and trade suggestions. He's familiar with domestic and world agricultural supply and demand tables and works to analyze government and economic reports related to commodity and financial markets. And we're glad to have him here with us today.
Thank you.
Prior to that, Ken worked for Archer Daniels Midland as a physical trader of wheat and feed grains, and we're looking forward to some of his perspective as well. So without further ado, I'd like to ask our experts to give us some perspective on what's ahead for tomorrow's USDA reports. And Ken, I'd like to start with you.
Well, thank you for having me today. I guess we'll start with the corn market tomorrow. We tend to believe that tomorrow for the USDA report, we won't see a big change in the planted acreage from where the USDA put in their prospective planting report. Historically, they don't have a tendency to do that on the first report. We do expect to see a modest change to the yield, perhaps a reduction based on delays in planted acreage. But I think the main point with the corn balance sheet tomorrow is we would like to see, and we think we'll see a pretty significant decline in demand for next year, particularly in corn exports. Brazil currently is expected to produce a second consecutive record crop, and we believe that you could see corn exports tomorrow for the next marketing year come in between 1.15 and 1.2 billion bushels. And as a result, we think that the corn carryout tomorrow could come in as high as 2.4 billion bushels. That would be a 27-year high. Next, for soybeans, I believe the market is looking for a carryout for next year, around 235 million bushels. The conference estimate was about 250 million bushels. And we believe that the USDA won't deviate too much from the conference estimate. In fact, there might be demand revisions to the downside for next year based on Brazil production for this year and Argentina production for this year. So we tend to think that the low end for the carryout for tomorrow's report in 2013-14 will be 250 million bushels. And also the 2012-13 balance sheet will be important. It's currently sitting at 125 million bushels. Most traders expect to see an increase in crush demand tomorrow. We would suggest keeping the eye out on residual use. In the past, they've decreased that to 1 million bushels currently. We're sitting just above that. So that might cushion the blow a little bit from the ending stocks if they decide to go that route. Lastly, for wheat, in our opinion, the global ending stocks will be a huge factor tomorrow, and the market may be underestimating just how big of a rise we could see. Currently, there's forecasts for Black Sea, so Kazakhstan, Ukraine, and Russia, to all see a significant increase in production next year. We believe it's too early to account for any weather issues at this point as far as resulting in a decline in production. And you might see ending stocks tomorrow on the global scale be as high as 195 million tons. That would be at the high end of the 10-year range, and the market's looking for around 184 to 185 tomorrow. So while the market has been well aware of the production issues in the U.S., particularly in Kansas, Oklahoma, Texas, Nebraska, South Dakota for the Kansas City crop, unfortunately the market over the last 5 years has tended to put a lot more attention to overseas production, Europe, Black Sea, Australia, as they've become premier exporters really in the world market. And certainly if we see a big increase in production next year from the USDA tomorrow, the market might overlook a little bit of the production decline that's expected in the U.S. next year because of the drought and because of freezes and react in a bearish way. So,
great. Thank you very much, Ken.
Thank you.
Bill, would you care to provide some additional texture and perspective from your point of view?
Yeah, from 2003 to 2006, I was the USDA's principal grains economist and worked on the World Board and put together the May WASDE projections, both for wheat as well as for corn. Ken is correct. There's only been about 2 years out of the last 40 that the USDA in the May WASDE did not use the NASS prospective planning's figure. However, if you go and you look at the yield projection and you compare what the USDA said in the May WASDE, you compare that to the Outlook Conference, which was done in late February. Starting in 1995, the USDA started to produce a detailed balance sheet at the Outlook Conference. So we've got about 17, 18 years of data that we can compare. It turns out the USDA frequently made changes in their corn yield projection, and many times when they did so, they commented it was because of planting progress. So if planting progress was advanced, like it was last year, they raised yield by 2 bushels over the prospective, over the Outlook Conference. In other years, they've lowered it as much as 3 bushels. We think that if USDA stays with the pattern that they've been following in the past, and there's no guarantee that they will lower their yield projection by 3 bushels. Possibly it could be more, possibly it could be less, but that's the number that we're using. So instead of using 163.6, which is what they had at the Outlook Conference, they'll use 161.6. So based on that projection, we're looking for a corn production number tomorrow of about 14,377,000,000. That compares to the 2012 crop of 10,780,000,000. Now, if you take a look at soybeans, there's no drama going on right now. Again, USDA is in all likelihood going to use the prospective plantings report estimate on acreage planted, and they will in all likelihood use the same yield that they had at the Outlook Conference. So we're looking for a soybean production number of 3,387,000,000 bushels. That compares to last year's 3,015,000,000. With regard to ending stocks, we agree with Ken that we're likely to see the USDA lower their corn export projection. At the Outlook Conference, they had 1,500,000,000 bushels projected for exports this year. We think they're going to take that down at least 100. One of the difficult things about the estimating the size, not necessarily the size, the exports out of Brazil, is the complex set of agricultural policies that the Brazilian government uses. They have minimum prices by state. They also have export transportation subsidies, where they subsidize the transport of grain, which is trapped inland, to an export port. Now, depending on how much money they want to spend, is going to be an important factor in how much corn stocks are actually made available. It is possible that an unusually large portion of the Brazilian corn crop could get trapped inland if the Brazilian government does not provide sufficient funds to provide transportation subsidies. We're looking for ending stocks in tomorrow's report for corn to be $2,248,000,000. That compares to what we think ending stocks will be for 2012-13, the current marketing year. That's $7,742,000,000. So that's 2248 to 742. That's, in other words, ending stocks we think is going to triple next year. With regard to soybean ending stocks for next year, we're looking at USDA coming out with 272. That compares to what we think USDA will say tomorrow for old crop of 110. So it's about a 170% increase in soybean ending stocks. Certainly, if these numbers are borne out, given the growing season that we have yet to go through, we're looking at, by harvest, sharply lower prices for corn and soybeans than what is currently being offered in the futures market.